Good morning and happy Monday to you. You're watching Trade Talk on BQ Prime. My name is Alex Mathew, and with me, as always, is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
Well, we're up bright and early, or rather, we were, and we're here to tell you about the stocks that you need to watch out for in trade today. Neeraj has already taken you through the trade setup, but just to lay the context a little bit at this juncture, you have the Asian markets that are currently a little mixed in trade. Futures are pointing to a bit of a slow start to the US markets as well. That's on the back of the close on Friday. For our markets, however, we had quite a pop in trade at the end of the week and quite a few indications that Hiral will take you through with regard to the technical indicators and why some of those factors are leading into what happened on the benchmark indices on Friday. But if I talk about the key movers, you had ITC, the HDFC Twins, and Reliance Industries that were in focus.
Absolutely. And in fact, the participation that did come in from the banking names was something which actually provided that fillip in terms of Nifty as well. And it's interesting to see how Nifty is now only 60 points around away from its life high levels. Now, Alex, the key is going to be whether we are going to be able to achieve those life high levels of 18,887 this week, or will the global markets play spoil sport? Because clearly, US has ended weak. Europe was in the positive on Friday. And as you mentioned, Asia has been trading pretty mixed.
Yeah.
Now, that's something which we need to consider from here.
The Nifty Bank, and you pointed it out, Nifty Bank gained about 1% or so on Friday, and it has been a bit of a laggard. Perhaps with some more participation, as you pointed out, that march towards the all-time high is just a matter of time. Perhaps this week?
Absolutely. That's something we need to wait and watch. But clearly, 4 consecutive weeks is where we've seen even the mid-cap index scale new heights. And that's something which is interesting. Around almost 7,200 odd crores is what the FIs have pumped in the last 4 trading sessions. So there is some bit of momentum coming in from there. Let's quickly look at the technical side of it. Now, we've regained those 18,800 levels on Nifty, and we're now inching closer towards the life high levels. The all-time high journey has continued, but clearly on a closing basis, we've achieved the all-time high. Overall, where do we stand is interesting. Clearly, if you see in terms of 18,720, that's going to be a level we should be watching out for. And above 18,720, you could see Nifty that could move to levels of almost 18,980. But if Nifty breaks 18,720, then there is a possibility that the uptrend will remain vulnerable and we could slip towards levels of almost 18,600 to 18,550. So again, this week is going to be crucial, and the impact in terms of global markets is something we need to wait and watch. Bank Nifty as well has been hovering around those 44,000 levels, and this is since the last 5 weeks, right? So there is consolidation there. But clearly, below 44,000, the weak sentiment is going to continue, and overall it could slip to almost 43,250. Any fresh uptrend in terms of Bank Nifty is going to be possible only and only if we are able to sustain above those 44,000 levels on closing basis. So this is how the technical structure is looking like. But Alex, if you see from an F&O perspective, now, clearly, we've been seeing aggressive put writing as well in terms of Nifty. If you see the put options, the concentration has been significantly higher versus the call strikes. So 18,700 and 18,800, I beg your pardon, put strikes are holding more than 1 crore shares each, whereas, as we mentioned, it's significantly lower on the call. Now, Bank Nifty as well, if you go to see a significant open interest both on the call and the put side, which is clearly telling you that it's going to be a very range-bound movement between those 44,000 to 43,700 levels. So that's what the F&O data is also pointing out to.
That's actually indicative of what we've seen over the past week as well, both for the benchmark as well as for the Bank Nifty, and particularly for the benchmark.
Absolutely. And Bank Nifty, in fact, has been in that range-bound phase in the last 4 to 5 weeks.
Yes.
So that breakout is absolutely necessary from here on.
And let's talk now. We've given you a context of those technical levels. Let's get into stock-specific action then. Admittedly, not a lot to speak about. I think Friday we had a very heavy stock-specific day. But let's get to the list. I think we're talking about Nykaa first thing this morning.
Absolutely. So Nykaa has been in focus. In fact, all of these, new age tech companies, that's what probably will become the talk of the town as well, because now you're seeing some momentum built up in terms of Zomato. Zomato actually came back to its IPO levels. So from there on, where it's going now, Nykaa is in focus as well. In fact, Sajid is standing by to give us more. Good morning, Sajid.
Good morning.
Sajid, what is it with Nykaa now, basis the annual report that has come in, and what brokerages are saying? Is there a possibility where they're betting big on premiumization? Because again, premiumization is something where majority of the consumer companies are looking at.
That's true. If you there was an analyst meet of Nykaa, and brokerage is little upbeat on the based on the commentary which has come in. They've been looking. Nykaa is going to focus on premiumization, and that's what is going to drive the growth for the company. Major costs with respect to employee and warehousing are behind, because in the last 1 to 2 years they've been looking at expanding their warehouse capabilities so that they can service various markets through online channels. That's behind. That's what Nykaa said, and that would mean that there is a good runway with respect to rising margins going forward. In the beauty and personal care segment, which is the biggest segment for them, the premium segment is growing at 2.5 times more than the mass segment, which basically means that they become a partner of choice for many of the leading global brands and domestic brands which have high price points, and that gives them a higher margin as well. Now they're guiding for a profitable growth with scale and efficiency coming in. The margins are also going to go up there in that segment. They're saying that this segment between FY22 to FY30 is expected to grow. With both beauty is expected to grow at 27% CAGR and fashion at 29%, and they're going to grow above that going forward. In the fashion segment, which now constitutes nearly 25% of the gross merchandise value, or GMV as we call it, they are moving away from discounted models and more focus on in-house brands, which will give them higher margins going forward.
So overall, I think, Sajid, with all of this, what comes out of the wash as well is that new launches is what they are going to focus on as well, with the kind of target
Seasonal
segments that they're
launches in the
looking.
fashion segment, seasonal launches is what they're focusing on, and on the in-house models, which is good. No, in-house models have a much higher margin profile as compared to the other brands, where the margin profile is much lower, and they're pushing they have to push the brands out within the season. So the margin profile for the fashion segment, what they're saying is that it because of the in-house brands, which now constitute nearly 13% of their sales, they will get profitable much faster, and margins growth will come in on a gradual basis.
This is interesting because even in the context of the rapid growth that they're seeing in various platforms or various verticals, if you compare it with a market like China, is still significantly underpenetrated. So the roadmap,
but it's a very hyper-competitive market.
Yes, that is true.
Absolutely.
That is true. Thanks, Sajid, for that update. Nykaa is a stock that you want to watch out for. And incidentally, a lot of companies coming out with annual reports, so therefore a lot of information coming out as well. The next sector or other company that we're focusing on comes from the cement sector. And we've spoken about it, Hiral, in the recent past, where the demand trends, the tailwinds for these companies are incredible. Dalmia Bharat is a stock that we're focusing on. It is a stock that has gained over 9% in just the last month. It is a stock that has gained 18% or thereabouts in the year-to-date period. It's not alone. The cement pack as a whole has done well. Ultratech also has seen a similar growth over the last 5-6 months or thereabouts. But Rishi is joining in to give us a sense of what the latest update is on Dalmia Bharat. Rishi, good morning.
Good morning, Alex. Good morning.
You were going through a couple of notes, and this is on the basis of the annual report. What is MK? MK, I believe, is the note that you've read. What are they saying about Dalmia Bharat?
So MK Global has given a whole rating as of now with a target price of 1950, which implies a 13.5% downside from Friday's closing. So Dalmia Bharat has given capacity targets of 47 million tons by FY24 as compared to the 41.4 million tons that it had in FY23. And it plans to achieve this by adding another 5.5 million tons in capacity this financial year. Additionally, it has also signed binding agreements with JPA to acquire 9.7 million tons in capacity. It's still waiting for some regulatory approvals, but this is also likely to add on to its capacity. Also, in the long term, it has given a capacity target of 75 million tons by FY27 and about 110 to 130 million tons by FY31. And it plans to achieve these targets by doubling its market share and also gaining a pan-India presence as well.
Absolutely.
So MK Global also came out with another report which talked about how the cost deflation is likely to benefit the profitability of the cement industry. So international pet coke prices. So pet coke is a crucial raw material for cement manufacturing. So those prices corrected by over 50% since its peak in last April, and industry fuel costs are likely to fall by 20 to 30%, and there are approximately cost savings of 250 rupees per ton that is likely to come in by the third quarter of this financial year. So since cement prices are expected to be remain more or less flat this year and raw material prices are falling down, it's likely to improve margins of the cement industry and as well as for Dalmia Bharat as well.
Sure.
Now, Dalmia Bharat also guided for a net debt to EBITDA target of 2x from the current 1x, and this is because it has planned to increase its capex by around 5,000 to 5,500 crore rupees. It also aims to double its renewable energy capacity by FY24, and it also expects to increase its revenue share in blended cements to 100% from the current 84% by FY26. So blended cement is a much more cost-effective and environment-friendly version of cements, so it is likely to benefit Dalmia Cements as well.
Fantastic. So that's a pretty comprehensive view on the plans that the company has.
Absolutely. And Alex, clearly, from Rishi's been mentioning as well, Capex plan is what we're looking at. The
Demand
margin
trends.
expansion is what we're going to look at as well in terms of FY24. So two key takeaways coming in there. But it's going to be interesting to see, because from a valuation perspective, if you see the target price as well, MK is actually looking at a downside from the current market price. So the key question from here on comes in is, have the valuations peaked?
Is it in the price?
Is it priced in already, or what happens from here on? Thank you, Rishi, so much for joining us and getting us, the details with regards to the cement pack as a whole. So that's with cement counters. But Alex, a lot of other stocks that will be in focus as well, right?
Yeah, absolutely. And we spoke about Interglobe Aviation, or Indigo, just last week. But the big announcement possible today is about a significant expansion to the fleet that they have, or rather in the form of an order that Airbus could announce. The Paris Air Show is on right now, and it's likely that they're going to make a big splash at the start of that show. Airbus could potentially announce an order for 500 new aircraft with Indigo. The order value is worth about $500 billion, but the actual amount, in fact, could be lower than that. This is for the A320neo that Indigo uses in its fleet, and this is, remember, a narrow-body aircraft, but they could be getting this Hiral to expand on their international operations. We spoke about the domestic operations and the fact that they control about 2/3 of the market right now.
And another thing to this one as well is that probably this will also be the order that Air India has been placing, probably.
Right. And this is obviously something that will pan out over the course of time. Just to give you a sense of the fleet right now, it currently stands at 304. And this is besides the backlog that they have of 500 planes from an earlier order of about 800 A320 neos, or A320s rather, from Airbus. So that's certainly a stock that you want to watch out for. That announcement is not in yet. And if we're talking about Paris time, we could see it perhaps in the second half of the day, but certainly sentimental impact on Interglobe Aviation, or Indigo as we call it. Grasim is the next stock that we're talking about, and this is based on an announcement by a US-based firm. This is now, the company's name is Lubrizol Corp. It is a company that is owned by Berkshire Hathaway in the chemical space, and it has announced that it will invest about $150 million in India. It has been in India for some time, but this time it's going to be partnering with Grasim to set up a 1 lakh metric ton CPVC resin line at Grasim's facility in Vilayat. It is also going to be doubling its own capacity at its plant in Dahej. So that's something to watch out for. Grasim, remember, has been working on several other business lines. The paints business is something that we have spoken about in the past, and the fact that it hasn't launched yet. Big plans there.
Cement again coming into play as well.
So certainly a stock to watch out for in trade. Another interesting announcement had to do in the ticketing space, in the railway space. Adani Enterprises as well as IRCTC. So the thing is, Adani Enterprises announced that it is taking over a company called Stark Enterprises, which is also known as Trainman, and it facilitates your ticketing service. Now, there were questions about whether or not they would eat into IRCTC's share, but IRCTC has come out with a notification on the stock exchanges to clarify that Trainman is one of their agents. They have 32 P2C agents, and this is one of them, Trainman. It only accounts for 0.13% of total ticketing, whereas IRCTC handles about 80+% of all of the ticketing in India. So and they've also said that they don't really compete with their agents, and whatever has been going on so far will continue to take place. The acquisition of a company does not change that. For Adani Enterprises, of course, it's the adding on of another business line, and we'll see how that expands going forward. And finally, Dr. Reddy's Laboratories. This is sentimental again. This is the US FDA completing an inspection at its API manufacturing facility in Bolaram in Hyderabad. The inspection was conducted on the 12th of June to the 16th of June, and there were no observations in that.
Right. So, Alex, lots to look out for. But apart from this, few of the other names that we are watching out for is a Bharti Airtel. Now, that's going to be an interesting one because what news reports are suggesting is that they're weighing an offshore bond sale, and this is mainly to raise almost around $1 billion. Now, the reason why they're looking to raise funds is mainly to refinance the existing debt as well as to meet some of its Capex requirements for 5G. Now, they've been discussing with foreign banks, including Barclays, Stancy, as well as Citi. However, the full plan with regards to fundraise has not been finalized, and the offshore bonds are expected to have a 3 to 5 year maturity. Now, overall, as per the reports, Bharti Airtel has not responded to the queries, whereas Barclays and Standard Chartered have declined to comment, and you have Citi, which has not really given out an illicit response. Interesting to note, around as on 31st of March, Bharti had a debt of around 1.4 lakh crores, and they've said that they've stopped Capex with regards to 4G. And in FY23, their Capex stood at around 28,500 odd crores. In fact, CEO Gopal Vittal had already mentioned that the Capex in terms of FY24 is going to be a similar ballpark number that we've seen in FY23 as well. So that's going to be interesting to watch out for. Apart from that, a lot of other companies that will be in focus on the back of Capex plans. Tata Steel, a 16,000 crore Capex, and that's on a consolidated basis for FY24 is what they've announced. Out of this, they've said 10,000 crores is going to be for the standalone operations, and another 12,000 odd crores is
2,000 crore.
2,000 odd crores. Total is 16,000.
Yeah.
So 10,000 is with regards to FY24 domestic.
Yeah.
What I was mentioning about 12,000 was basically that in FY23,
Right.
they had a 12,000 out of which for India and the European operation.
Right.
So that was the number for FY23. Then out of the 12,000, 8.5 was for the India operation. So India operations have moved up from 8.5 crores to almost 10,000 odd crores. Moving on, you have Patanjali as well, but they have a Capex of almost 1,500 odd crores over the next 5 years. And this is mainly to scale up their palm oil business. Now, they have said that a 45,000 to 50,000 crore turnover in the next 5 years is what they are targeting. So that's going to be an interesting one. And you have a Shriram Properties where they're looking to invest almost 750 odd crores on their housing construction project in FY24. So these are the Capex ones. And lastly, watch out for Kalyan Jewelers as well. A good up move, Alex, that we saw in terms of Friday's session. And we did have Hydel Investments, which is owned by Warburg Pincus. They sold around 6.2% stake, right? Out of this, if you go to see, they've reduced to 17.6 from an existing 23.82. So they still hold stake. The total transaction value was around 724 odd crores. Interesting names like a BNP Paribas Arbitrage, Franklin, Nomura, DSP are the ones who've actually gone ahead and bought. So probably that momentum could continue. In fact, analysts have been saying that the valuation gap between a Titan and Kalyan is absolutely huge.
Wide, yeah.
Right? So because of that, now for a Kalyan to start moving up the valuation change and garner investor interest is going to be crucial. And that's something probably could be a phenomena that we could be witnessing from here on. So watch out for Kalyan very closely. And very lastly, of Zee Entertainment that will be in focus, as we know that we do have the hearing. Sat hearing in today's session. So that's going to be a counter. Probably we'll see some bit of moves.
But the key takeaway for today's session, I think, has to be about Capex and the number of companies that are announcing Capex. We've talked about quite a few stocks. Let us know what you think. And in the meanwhile, you should stay tuned to BQ Prime because trade is starting in just a few minutes and we'll bring you all of the live action right here on bqprime.com. Thanks so much for watching. Do stay tuned.